Hello. Singapore Investment Week coincides with some awful times in the global economy. Not so long ago, we saw Cyprus avoid a bankruptcy just at the last minute through a European-funded bailout. And of course, the markets have been going through a lot of volatility as a result of all of that. So where are things at right now? Let's talk to Ng Weiwen, who's from Phillip Securities. Weiwen, you're a macro analyst, so you're going to give us the macro picture. Is the world going to end?
No, the short answer is no. Essentially, what happened is that notwithstanding the bailout in Cyprus, the global recovery is still on track, right? In the US, in China, based on the recent PMI data releases, it's actually better than expected activity in the manufacturing sectors, right? Elsewhere in the world, we have major central banks, your G4 central banks, right? For instance, like your US Fed, your Bank of Japan, your ECB, your Bank of England, they're all undertaking synchronized monetary easing, and that should continue to lend support to the risk rally, right? So in essence, we think that 2013 will essentially be a year of equities as compared to fixed income. So year to date, equities have averaged around 7% return as compared to fixed income, which has averaged about flat returns.
Right. But actually equities were already strong last year, weren't they?
That's right. So they were actually strong since the last quarter of this last year, right? So the rally started third quarter, fourth quarter of last year. But the thing about equities is this, right? Equities occasionally will pull back due to uncertainties, right? Like what we saw in Cyprus, right? Like what we're going to see in come May when the US needs to raise its debt ceiling. So all these uncertainties will actually cause equities to pull back, and that would offer investors an opportunity to enter the equities market if they haven't already entered. Right.
I guess part of the problem with financial crises is that companies that we always thought to be really strong all of a sudden disappear, right? Bank Leumi in Cyprus, probably not a household name, but again, you would have thought that they would survive. Lehman Brothers back in 2008, again, you would have bought the stock thinking it's one of the big four, it can't possibly go down. And then it did. So in an environment where there is this volatility, and it is just so hard to pick winners, it's sometimes hard to pick companies that will even survive. How, as an investor, can you then take advantage of a rally which hopefully come about in May?
I think, Mark, you raised a great point. In terms of the stock universe, there are so many, essentially so many counters, so many companies. It's very difficult to actually pick winners. But to participate in this equities rally, if, for instance, one is bullish on, say, Greater China, if one is bullish on the US, he could actually ride on this rally through ETFs. They're actually available, as well as CFDs, right?
Now, ETFs, exchange-traded funds, there are quite a lot of them in Singapore.
That's
in fact, arguably the Singapore Exchange is the one with the most exchange-traded funds in this region. But again, don't you have to pick winners? For example, would you pick a European ETF at this time? When there's talk about the euro being phased out, the eurozone collapsing, there's still a lot of concern about Italy and Spain and Portugal's debt situations.
Right, so with regard to that question, the key thing to remember is that the eurozone is essentially in a very fragile equilibrium. There will be bouts of volatility here and there. But then again, valuations are compelling, right? Because prices are depressed and stuff like that. So if you're a long-term investor, right, like what we saw with Greece and Italy last year, stock markets, they actually ran up quite a bit. So if Cyprus right now, they actually offer a chance for investors to actually enter into such ETFs that give exposure to these economies.
Okay. And are you sure? I mean, what happens, for example, if the eurozone or the euro is somehow phased out? I mean, what will happen to shares that are bought as part of the ETFs? Right.
The thing is that once you enter any position in any instrument, we urge investors not to leave it aside and forget about it. I mean, one has to monitor proactively political developments, especially if you enter the European ETFs, you monitor political developments there, especially. In regards to whether the eurozone will actually phase out, I guess, like what we saw with Greece especially, there's a strong political will to actually keep the eurozone together. It's just that they do not want future bailouts to be more of bailing out with more debt, right? because that would get the Germans angry. They're facing their elections 6 months later, right? So now what Cyprus sets a precedent insofar as getting a private investors to bail in, right? Taking a haircut on their deposits. So this is what actually caused markets to be slightly jittery right now. But in the long run, in terms of deleveraging for both the households, for both the private investors, that's the way to go for the Eurozone.
Okay.
Right.
Now, ETFs are actually relatively easy to understand. They act like a mutual fund, but they trade like a stock. CFDs, though, are a little bit more risky. You definitely can't put those aside and forget about them, right?
That's right. So for instance, let me start off by explaining what a CFD is. So CFD essentially, especially for World Indices CFD, right, they actually track the underlying index. So for instance, if you look at the, we have a Straits Times CFD offered by Phillip. So that actually tracks the Straits Times index, right? So if you want exposure to the market, right, you could actually enter a position, a long position, a short position with CFDs. So that's what CFDs offer you, to enter a long and short position.
As opposed to an ETF, which you just buy and hold for the long position.
Yeah. So you could actually profit from a falling market with short positions in CFDs. But then once again, as you alluded earlier on, CFDs are very risky because essentially they are leverage, right, products. So with regard to leverage, it means that your losses could actually be magnified if you do not monitor them closely and prices run contrary to your position.
Right.
And hence we urge investors, if they do enter into CFDs, to actually place very tight stops, right? So that it would prevent a situation where the whole investment will actually be wiped out. Right?
Okay, good to know. So ETFs for going long, CFDs for going long or short. And are there any particular CFDs or ETFs that you're recommending at this current time? Right.
With regard to ETFs, we have actually a couple of it in mind, but in terms of asset strategy, we actually overweight on these economies, right? We actually overweight on the US because of improving macro fundamentals. Your housing data suggests
the jobs numbers also quite good.
That's right. CapEx rebound, that's what's happening. In China, we're also overweight. China, Hong Kong are overweight because of compelling valuations, right? And people are actually looking forward to reforms by the new leadership, right? We're also overweight on ASEAN economies such as Singapore, such as Philippines and Thailand due to resilient domestic demand, as well as infrastructure building. And investors could actually ride on this strength in these economies through ETFs, right? They're actually available and listed on the SGX, right? As well as CFDs, right? That they could actually enter positions into.
How much overlap is there actually between the ETF offering and the CFD offering? Are there, for example, markets that you can only track with a CFD?
I would say that CFDs, because the nature of CFDs, they tend to be more ETFs as compared to CFDs, right? Because CFDs are essentially OTC products,
right,
over-the-counter products, right? So, and there are different ways of replicating the index similar to ETFs also. So by and large, I think there are fewer CFDs as compared to ETFs available on the whole, yeah, on average. Yeah.
All right, and you can find out about all of these investment opportunities either from you at Phillip Securities or during Singapore Investment Week. Here is the URL on the screen now for you to visit, take a look at the various events that are on offer and make the most of this learning opportunity, particularly in a time like this. Who knows, we may not have turbulent times like this again. What a great learning opportunity actually the turmoil currently is. I'm Mark Lowdy here with Ng Weiwen from Phillip Securities. Thanks for watching.